Is the crypto bull run over? I want to give you a completely different perspective. I want you to start looking at this from an investment thesis perspective. The question we keep getting, is the bull run over? Is crypto done? The answer is no. Crypto is not done. Crypto is the future of your monetary system. The video I'm about to do tomorrow is going to be extremely, extremely important. In today's video, I'm going to show you the absolute change that we've had from the previous administration to the new administration. We went from an SEC that was completely destroying cryptocurrency, bringing us into a centralized system, to a rewiring in a decentralized system and deregulation. And I'm always going to share with you, not financial advice, but exactly how I'm positioning myself for the biggest transition in our financial system in history. So is the crypto bull run over? I think the 4-year cycles got thrown out of whack a little bit. So I want you to build a thesis. I want you to look long term. And I want you to understand it's the person who can stay in the market the longest that wins. It's not timing the market, it's time in the market. The person who can watch paint dry will win. And it's the power of compounding. At some point, some of you are going to have an Apple moment, a Google moment, that moment where everything goes parabolic. It happened to us when Trump got elected. I was accumulating XRP at 17 cents. And then Trump gets elected, it goes up 800%. So all of you at some point, if you go into your circle of competency, will have that moment. But you got to have patience, you got to have persistence, and you got to stop thinking red and green, and you got to start thinking greed, okay, and buy. Red is buy, greed is sell. So I'm going to break down the facts, figures, numbers, logic. I highly encourage you to hit the subscribe button, comment down below, and like this video so you get the notification, because tomorrow's video is going to blow your mind. And I'm going to tell you my exact investment thesis. I have another one on the horizon that I'm probably going to be adding to my stock portfolio on December 9th. I'm not going to gatekeep anything with you guys. I'm going to share with you exactly what I'm doing. Not financial advice, just educating you on how to empower you to make your own decisions. All right, so let's go right into this. I probably should have the screen pulled up here. Give me 1 second. Boom, boom. All right, so the first video we're going to watch is the Choke 2.0. So the Biden administration is under fire. So they're starting to peel back the curtain. They're finding out that there was a full choking and cutting off of the cryptocurrency industry. That is completely being released. I feel very, very, very bullish about investments in general for a couple different reasons from a macroeconomic perspective. Okay. Quantitative easing has started. They've started the printing machine. They're going to continue to bring rates down. And Trump is about to bring in a Fed chair that is extremely bullish for the markets. Check this out.
Financial Services Committee issuing a 53-page final staff report on how the Biden administration debanked digital assets. It details how Biden-era regulators used vague rules, excessive discretion, informal guidance, and aggressive enforcement, all to pressure banks into distancing themselves from digital asset clients. This resulted in at least 30 entities or individuals losing access to financial services. Joining me now is Arkansas Congressman French Hill. He is the chairman of the House Financial Services Committee. Mr. Chairman, great to see you this morning. Thanks very much for being here. I want to kick it off with your report. What can you tell us?
Well, Maria, happy holidays. Great to be with you. Hope you had a great Thanksgiving. This report identifies all the ways led by Gary Gensler, who was chairman of the SEC, the bank supervisors led by Michael Barr, then vice chairman of the Fed, and others, to systematically debank legal businesses in the United States engaged in the digital asset innovative space. And this has was terrible for American competitiveness. And it led me during the course of the Biden administration to offer my Fit 21 bill, which is now the Clarity Act, which gives the rules of the road, clear market structure road rules, so that people know how to innovate. They can count on the federal government for not debanking them and actually encouraging the use of innovation blockchain technology inside financial services.
Boom. There you go. That's what's coming, guys. That's what's coming for you in first quarter. What's going on here? Okay, perfect. Okay. So the Clarity Act, by chance, the government shut down for 40 days. Now the Clarity Act got pushed to 2026. You're going to have tariff revenue coming in like crazy. He's going to start giving out stimulus checks. He's trying to abolish the taxes, all these different things happening. Yes, you're going to have a very, very bullish economy for about probably 1 to 2 going into the next presidential election, and you are going to hit inflation, guys. You can't print money in a low interest rate environment. That's why they're positioning themselves in gold, silver, Bitcoin, fixed supply assets. You got to beat inflation, guys. So a turning point for the crypto in the US. We're on track to forge forward with crypto and embrace the new era of innovation. Paul Atkins, this is a new SEC chair here. Look how dramatically we have shifted.
Can you do what needs to be done with crypto without legislation? And do you think that can happen before the end of the year?
I'm looking forward to having an innovation exemption that we've been talking about now. We'll be able to get that out in a month or so is what I'm hoping. We were impeded a bit by the government shutdown. Obviously, we couldn't work on things during that time, but we're on track and we will be able to forge forward with the crypto area and make sure that we are able to embrace this new area of innovation that for too long the United States basically is just pushed back against. And so I'm looking forward to having rules that are focused on helping that sector of the economy.
Boom. How refreshing is that, right? And Fruition's Productions posted this. Possibly new Fed chair will unleash cheap money results. Continue to rush to safety into gold, silver, Bitcoin, crypto assets while inflation runs wild. Shay Bowler posted this, if I spelled that or said that correctly. I don't think people realize how bullish Kevin Hassett as the next Fed chair would be for the market. Hassett could spend his entire career arguing that the economy accelerates when capital stays cheap and the Fed leans towards expansion instead of restraint. If Trump puts him back at the center of policy, then the person shaping rate decisions becomes someone who consistently pushes for easier financial conditions and faster growth. A growth-first economy running monetary policy is about a market-friendly as it gets. That's good. That's fantastic, right? Because smart money is going to move into fixed supply assets, things like Bitcoin, XRP, gold, silver, right? Because there's going to be inflation, guys. There's going to be a bubble. And I think it's going to be in the AI sector. And when the AI sector bubble pops, I'm going to be buying those stocks. And again, tomorrow's video, I'm going to share with you something I'm looking at. I'm starting to get into some stocks slowly and methodically. I do dividend stocks, but those are high risk. It's not my investment strategy. That's my cash flow strategy. But I did get into American Bitcoin, ABTC, and I'm looking at another one that's connected to Cantor. And I'm going to be tying that down probably December 9th. And then I'll add that to my stockpile. And I will share that with you guys tomorrow. Regulators are calling for tokenizing is inevitable. We need to embrace and keep the United States at the forefront. So this is, again, the SEC chair talking about crypto.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely. And it's the way the world will be, here in maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace, and as it's as all these new innovations were coming about. So that's no more. We're actually embracing it, and I believe that we need to be embracing it to keep the United States at the forefront.
Think about that, guys. Many of you have been following my channel since 2020. You did it. Think about that, guys. I mean, really, really dive into that. What you were made fun of, the wild, wild west, all this stuff, that is the SEC chair, the head of the SEC. We went from Gary Gensler, completely against Chokepoint 2.0, to we are moving into crypto. Vanguard, Franklin Templeton, the biggest banks, oldest banks in the world, BlackRock. And wait till I show you the connection tomorrow. What's happening, guys? I'm building my portfolio based on facts, figures, numbers, logic, and no emotion. The 20th century banking system. Think of JP Morgan. That was the beginning of that system. Okay. JP Morgan and the Federal Reserve. That's what I want you to think about. And that's what I'm going to be explaining tomorrow. You are now heading into a new 1913 Federal Reserve Jekyll Island type moment. Remember, Trump had this big meeting with the bankers, and now all of a sudden, all these big banks are coming into crypto now. It's your new monetary system. It's no longer centralized, it's decentralized. And we get the opportunity to invest in the picks and shovels, the rails, and the new gold. Okay. There's no emotion for this for me. That's why I don't care about bull, bear. I care about red is green, greed is sell, and protect. And I'm going to explain exactly what I do. So how do I pull profits? Merlin, the smartest way to track your crypto. This is my app that we created. So I'm the co-founder and one of the creators of Merlin. 38,000 lines of code. We built this to help people understand how do you take profits. Don't be a rubbernecker. Don't watch it go up. Don't watch it go down. This is an aggregator that shows all your cryptos in one place, keeps you organized. You can set up an exit plan, or it keeps you stoic and calm, and you exit on the way up. You're never going to catch the top, guys. So we teach people and educate people on how to take profits. So you can try it 30 days for absolutely free. You can try it before you buy it. Down below in the description of my video here on YouTube, or click my social media platform. Try it for 30 days. Play around with it. We do not hold your keys. We do not hold your crypto. It is an aggregator. You can see all your cryptos in one place. So when you're traveling around and using other Wi-Fis, use Merlin. Nobody can access your crypto. It's just data. Then you can set up your exit plans, and we send you an alert when you get close to your exit target. And then you calmly exit. And then here's what I do when I exit. And I will always, if you're new to my channel, I'm going to break down things incessantly, repetitively, every single video. I invented what's called CAPL DR. We're actually getting it trademarked. It got approved, a write down thing. We're getting this actually trademarked. CAPL DR, cash flow. Well, let me explain why I created CAPL DR. Guys, nobody teaches about inflation. You think you're moving ahead with your investments, but you're not even beating inflation. And if you think inflation was bad before, okay, the economy will be phenomenal over the next 3 years. I really believe that. But guys, you cannot just math. You can't print money in a low interest rate environment and allow stock markets just to, like, the AI boom is going to be like, boom, there's going to be huge. Guys, study 1920 to 1929. There's been 32 major market collapses over the last 200 years. There will be a major market collapse. There will be a major market collapse. So think about that. That's how I do my investing. Okay, I think about it. If the market collapses, where would I want to be positioned? Do I want to be in all these hype stocks and all this AI? I will buy when it dips. When it's red, I'll buy good companies at a fair price. So what I'm doing is I'm positioning myself with an ecosystem. It's CAPL DR. Okay, DR is de-risk, de-risk, de-risk. C is cash flow. Every single time I get paid, I create more cash flow. Richest man in Babylon. At first, in my first bull run, I created businesses and I scaled my business. I've been in business since we've been at this for 8 years now, right? It took me a long time. And so it's like, I don't want to keep building businesses, guys. I mean, it's like, you know, 7 sources of income, all that stuff. Yeah, I have all that. I have all that stuff. But I started to study Warren Buffett and Charlie Munger. I'm like, wait a minute. I want to invest in other people's company on the stock market and get paid checks 24 hours a day and make money while I sleep. So I started to learn about dividend stocks and going deeper into that, right? So every time I get paid for my businesses that I scaled that you have 24 hours, it took me a long time to get there. But I have businesses that produce income 24 hours a day. I have 6 different companies, 3 are in full profit. When I get dividend checks from those companies, I take income and I take 10% of that income and I put it into dividends. So I put into stocks that create dividends. You have things like Coca-Cola, you have Apple, you have synthetic option calls that are a little bit newer, high risk, high return. That's what I'm playing in. Okay. You have things like RMR, you have real estate. You can easily research dividend stocks, guys. So dividend stocks, everybody's trying to create these side hustles. Just put your money into dividend stocks, guys. There's high risk, there's medium risk, there's low risk. But what I do is DR, remember DR? When I get paid off those dividend stocks every Monday, I de-risk out into A assets. Okay, here's my portfolio, and this is my, well, if you want to know my top, this is what it's going to look like by 2030. Okay, I have many other cryptocurrencies, so and people are like, oh, freak out when I say my, but I'm telling you exactly what my tops are going to be. Okay, so here's my thesis as I go into 2030, and I'm probably going to add another one on December 9th, and I'll let you guys know exactly what I'm doing. Not financial advice, just being open and authentic with you so you can follow along and see how I do. Okay, it's going to be XRP number 1. by a long shot. It'll always be number one. Bitcoin is number two. It continues to grow. Bitcoin is my supercharged savings. I store my wealth there. We have WFI is about to shoot into the number. This is what the thesis is going to look like by 2030. Okay. It'll be WFI, and then ABTC will be my top stock. And I'm about to add another stock on December 9th, which I'll do a whole video on that tomorrow. Okay. So we're going to have XRP, we're going to have Bitcoin, we're going to have WFI, we're going to have ABTC, and then we're probably going to add in another stock. And I have Solana, I have HBAR, I have XLM, I have Algorand, I have VeChain, I have all those other, ISO and many other cryptos, but I'm going to be consolidating. This is what I'm focused on. I just want to be clear. I'm very thesis based and I'm very hyper focused. Okay. Why? What's the why? Payment rails, XRP. I believe in it. My circle of competency. I understand it. I understand Bitcoin. I understand fixed supply assets, and I understand inflation. So I like being in something that has scarcity. WLFI is the new, that's my most speculative, but now I'm very excited to hear the announcement yesterday that WFI is going to launch their real world applications in the first quarter. I'm like, yes. So that brings it less speculative and more reality, right? More utility. And then we have ABTC, American Bitcoin. I was so grateful. It collapsed in half. See how I said I'm so grateful that it collapsed in half? I buy good companies at a fair price. That's Warren Buffett style. I believe in it. So I'm investing in it. So it got cut in half. I didn't panic. I bought a bunch more. Okay. So that's ABTC is the picks and shovels. Bitcoin is the gold from the mining. We got XRP is the bridge currency. We have WLFI, World Liberty Financial, is the decentralized platform. And then I'm going to be adding another one that I'm researching right now. I'm going to do a video on that tomorrow, which will be on my stock side. I'm only focusing on things in my circle of competency on the top stock side that are connected to digital assets because I understand that at a deep level. Okay. Then when I profit, we're going to move Bitcoin off to the side. We're going to put that into leverage. We're never touching our Bitcoin. That's a store of value for our family in the future. Okay. All other cryptos, all other investments, when they go up, I hold 50% and I take profits on the way up. I use my Merlin tracker. I take profits on the way up because it's silly to watch it go up and watch it go down. Take profits because markets are cyclic. Nothing ever goes in a straight line. Everything cycles, businesses cycle, markets cycle, innovation cycles. So I pull profits and I go into P in my capital DR, protection. I use cash value life insurance. Okay. We work to max fund our policies. So when this bull run comes up, or if profits hits, or whenever it goes up, I just calmly exit. I don't wait for the bull run. If it hits my targets, I pull and I max fund my policies. That's number one. There'll be cash outside of max funding my policies. 10% of my exit will go into more cash generating dividends to increase my cash flow. The rest will sit in a stable coin waiting for red and fear. And I will buy the red and fear in my circle of competency. Very simple. And then L is leverage. Okay. Most people use leverage to become poorer, to buy things that are depreciating that take away from their future family. We use leverage to buy cash flow and buy assets that appreciate and repeat the capital DR cycle. DR is de-risk, de-risk. I'm in high risk, high return dividends. I de-risk out. I de-risk out every Monday. So I'm house money now. I've already hit the house money because my de-risk and my profits on the de-risk have beaten the net asset value erosion. Okay. I'm also de-risking out of assets when they profit, because there will always be a bear market. Everybody's like, oh, we're going to 10, 2025 hit. How did that work out for everybody? 19 billion in liquidation. Be very careful when people are telling you just to hold and leverage, hold and leverage. You better understand what you're doing. You better have money on the sidelines to right size that leverage. And you better have cash flow somewhere else. The only time I ever leveraged off my digital assets, and I explained to you guys, was my Bitcoin. I only did 25% leverage. Put it onto oh my gosh, I just forgot the name. Salt. I put it onto Salt, the DeFi platform. We borrowed to buy our brokerage. Okay. We had income coming in already. It was already, we just went into first position. I built my own brokerage, Freedom Insurance LLC. So I built my own brokerage, but I already had income coming in because I had a brokerage already connected to another company. So I wanted to be in first position. So that paid it off already. We paid it off as quick as possible, but we only took 25%. And then when it went on to the DeFi platform, they only gave 75%. There was no risk of liquidation, zero. But we also had money on the sidelines within our companies, our other companies. If something happened, we could right size that loan right away. Or I only did 25%, so I had more Bitcoin to right size that, right? Don't play games with your digital assets, guys. Just my opinion. It's way too volatile. It's way too risky. If you're sitting on millions of dollars, you're Elon, and you can borrow against your your Tesla stock to buy Twitter, that's a big difference, right? Well, we're not Elon, we're not Michael Saylor, we're not sitting on billions of dollars, right? That we can just leverage, so be responsible on the insurance side. Go ham, man. You got 100,000, borrow 100,000, as long as you're beating the hurdle rate, as long as you're creating cash flow, as long as you're investing in something that's going to grow over time to pay back that loan, right? But if you can't pay it back, it comes off the death benefit. So you can wait till the next bull run to get that price appreciation. So hope that information reaches your heart well. Just want to give you a reminder and a warning. We are not financial advisors. We do not invest people's money. Never, ever, ever send anybody money pretending to be us. We don't invest crypto. We will not invest your money for you. That is not us DMing you. We will not hit you on WhatsApp. We'll not hit you on Telegram. I'll never DM you proactively and ask about your crypto. We have a financial education company. We are educators. We teach people how to fish so you can go fish for yourself and hit the button and take sovereignty of your wealth. Okay. We are not brokers. We're on the insurance side. I have a brokerage, but I'm talking about the investment side. We do not invest people's money. So please stop sending your money. People, Web3 is a scam. You don't need to put your money in a Web3. You got to be very careful with that stuff. People are using our videos. So you can also report scammers down below. We spend a bunch of money to take them down every single day in my social media platforms. So I love you guys. I appreciate you. I hope this reached your heart well, and have an awesome day. Warriors! Get your shit together. Remember, watch the video tomorrow. I'm going to be breaking down a new investment I will be looking at and give you the facts, figures, numbers, logic. I'll see you tomorrow.